Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is to get everything you need to know in 90 seconds at 9 o'clock. With news, financial markets and commodity markets have both turned sharply fearful on concerns the economic expansion is waning. Risk aversion was gripping markets earlier today, and a lockdown crisis in Beijing isn't helping. But first in the US, the Chicago Fed's National Activity Index fell in March to its lowest level in 3 months, and February was revised lower. And the more current Dallas Fed factory survey for April retreated to its lowest reading since October. Again, still expanding, but the track was weaker. This overall pullback is reflected in trucking demand stats, which are turning lower and quite sharply. But American April PMI data has actually been good, and the US factory sector is expanding faster, even as those concerns about the future build. Canadian producer prices rose very sharply in March, now running higher than 18%. In fact, that's their fastest pace in more than 50 years. And Japan finally seems to be getting some minor inflation. Consumer prices rose 1.2% in March, the most since October 2018, after a 0.9% gain a month earlier. The latest figure marked the 7th straight month of annual inflation for them, with food prices rising the fastest at over 5 years at 3.4%. In China, there are now realistic fears that Beijing will need to be locked down just like Shanghai has been. This is having strong echoes in financial markets, with equities falling very hard yesterday. And the Chinese currency, already under pressure, took another tumble, and their central bank took some measures to ease the pressure, although it's unclear if it had any real impact. And copper prices have retreated sharply today as growth fears build for China. In Germany, there's been surprise data released overnight, a surprise to me at least. Their latest business sentiment survey turned higher as companies were less pessimistic after the initial shock of the war in Ukraine. This survey happened before the French election result was known. And that positive French election result should help overall EU sentiment. In Australia, Westpac's respected economist Bill Evans has noted that underlying inflation will rise to 3.4% when the March data is released this week, and their jobless rate will fall below 4% in April. And, quote, on that basis of those forecasts, we expect the RBA will decide to lift its cash rate by 40 basis points at its June 7th board meeting to 0.5%. And the US Treasury 10-year yield starts today lower by 10 basis points at 2.80% and taking it back to pre-Easter levels. And the price of gold starts today down $35 since this time on Saturday, now at $1,898 an ounce. That's a large $80 drop in a week, or down 4%. And oil prices are $4.50 lower at just under $97 a barrel in the US, while the international Brent price is now just over $100.50 a barrel. And the Kiwi dollar will open today a little softer at 66.1 US cents and still about its lowest since mid-February. Against the Australian dollar, however, we're a half a cent firmer at 92.2 Australian cents. Against the euro, we're at 61.7 euro cents, also firmer. That all means our trade-weighted index starts today at 72.9, a little change since where we left it last week. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.